Question 11. Do you know balance sheet? Answer. Balance sheet is a position statement as it refers to a particular date. It is also referred to as statement of sources and application of funds. It informs about the various sources used by the organization which are technically known as liabilities to raise the funds which are referred as assets. Question 12. Explain how can the analysis of financial statements be carried out? Answer. There are two ways in which analysis of financial statements can be carried out. Internal analysis indicates the analysis carried out by the management of the company to enable the decision-making process. This analysis is carried out in the legal or statutory matters in which parties have the access to the books and records of the company. This is carried out in the legal or statutory matters. External analysis indicates the analysis carried out by the creditors, prospective investors and other outsiders who do not have the access to the books and records of the company. Question 13. Explain reserves and surpluses. Answer. Reserves and surpluses indicate that portion of the earnings, receipt or other surplus of the company appropriated by the management for a general or specific purpose other than provisions for depreciation or for a known liability. Reserves are classified as capital reserve and capital redemption reserve. Question 14. Explain share capital. Answer. Share capital is that portion of a company's equity that has been obtained by issuing share to a shareholder. The amount of share capital increases as new shares are sold to public in exchange for cash. Question 15. What is cash flow analysis? Answer. Cash flow analysis is the analysis in which cash flow statement is prepared which shows changes in inflow and outflow of cash during the period. Cash flow statement is an analysis tool used by large and medium-scale companies for inflow and outflow of money during a particular period of time. Question 16. What is funds flow analysis? Answer. Funds flow analysis is the analysis in which funds flow statement is prepared in order to determine the sources and application of funds. Fund flow statement is commonly used in business plans and proposals to show investors about the flowing of their funds through the organization. This is not used in annual reports. It is used by bankers who want to know how borrowed funds will flow through company operations. It is used to show the management how the cash is flowing through the company operations. Question 17. What is ratio analysis? Answer. Ratio analysis is a systematic technique of analysis and interpretation of financial statements, profitability statement and balance sheet with the help of various ratios so that the strengths and weakness and the financial position of the firm can be determined. This technique is not a creative technique as the information already given in the financial statements is used. Question 18. What are unsecured loans? Answer. Unsecured loans are the loans which are not secured against any security of the assets of the company. Following are the unsecured loans: fixed deposits loans and advances from subsidiaries, short-term loans and advances, other loans and advances. Question 19. What are secured loans? Answer. Secured loans are the loans which are secured wholly or partly against the assets of the company. Following are the secured loans: debentures loans and advances from banks, loans and advance from subsidiaries, other loans and advances. Question 20. Explain profit and loss account debit balance. Answer. As per the business entity principle, owner is different from the business. Thus, the profit generated by the business belongs to the shareholders, and hence the business is liable to shareholders for the distribution of profits. In the same way, when loss is incurred in the business, it is borne by the owners. Hence, it is an asset for the business as it is a receivable from the owners. Question 21. Explain miscellaneous expenditures. Answer. Miscellaneous expenditures are the incidental expenses which cannot be classified as manufacturing, selling, and administrative expenses. These expenses are not revenue in nature and hence shown in the asset side of the balance sheet and should be written off over a period of time. Example: preliminary expenses, development expenditures and expenditure on rising of shares and debentures. Question 22. What is a double entry system? What are its disadvantages? Answer. A double entry system records all transactions we usually keep in journals. It prepares all final accounts and closes the books of several accounts. It also posts journal entries regularly in all ledger accounts and then prepares for a proper trial balance. Some of the disadvantages of the double entry system include having and compensatory errors, which is difficult to find out in this system. The system that needs a lot of clerical labor and that it is hard to find all errors have been recorded in books. It is also smart to disclose the information which is not recorded in any journal.